Hello, hello, hello. Welcome back to the channel for all of you that have subscribed and those of you who have just entered the chat. Hello, hello, hello. I am so super excited to have you here with us today. And listen, guys, I'm about to have a little bit of my Thai tea. I want you to get your drinks. I want you to get your snacks wherever you are, because this is for those of you who live in a house and you are absolutely tired of paying your mortgage and you're trying to figure out, how do I cut my mortgage in half? Because I don't want to spend the next 30 years paying down this mortgage. This video is for you guys. I want you guys to understand that my channel is here to bring you guys information that is going to make you informed homeowners, informed future homeowners, sellers, buyers alike. Okay. So like I always tell you guys, the goal is to educate you, to entertain you, hopefully. But again, I am not giving you legal advice. I am just simply sharing with you things that I have learned being a realtor in DC, Maryland, and Virginia for the last 20 years. Okay. So I have my notes here, how to pay off. Let's get it together. How to pay off my mortgage, my 30-year mortgage, okay, in 15 years. Okay, because that's what we want to know. That's what we want to know. And so we're going to ask Chat GPT, and I am going to be checking what Chat tells us based off of what I know as a realtor in DC, Maryland, and Virginia for the last 20 years. I can tell you right now, while Chat is downloading, I can tell you right now that you can knock 7 years off your mortgage just by making one extra mortgage payment a year, right? And you can go and search paying off my mortgage journey, paying off my home journey. There is a whole community of people that have already taken on this journey. I want y'all to hop on to that side of the algorithm and get away from the negative side of the algorithm that is telling people to sell their house and home ownership isn't worth it, because that is a lot of bad advice, especially in DC, Maryland, and Virginia, where rent is astronomically high. It's at an all-time high. And I know that rent isn't only super high in DC, Maryland, and Virginia. So I'm just going to propose a question to you. Do you want to sell your house and go rent somebody else's house, or rent in a property management where they can tell you how to live, when to live, what to do? They can even tell you when it's time to get out. Okay. Those are the aspects about renting that for me out just makes me not ever want to do that. Okay. I would much rather own my house, live in peace, even if I have an HOA, even if I have a condo association. At least I know that no one can come and take my house away unless, God forbid, I stop paying my mortgage. And even if you stop paying your mortgage, it could still take about a year to 2 years for that foreclosure to go into process. And so we've talked about that in extent on other videos that I've done. But this video is for my homeowners that are looking for a peace of mind. Maybe you just bought your house, or maybe you've owned your house for 5, 10 plus years, and you would really like to get that mortgage paid off before retirement so you can actually enjoy your retirement and cut down the amount of debt that you have so that you can take those trips, go on long vacations, go on those long luxury cruises, and just enjoy life with minimal monthly costs. If that sounds like you, say, hey, I am ready to pay my mortgage off. Pay my mortgage off. Put that down in the comment below. And if you have already accomplished this amazing goal of paying off your mortgage before the 30 years, let us know in the comments below. Guys, I am going to bring y'all some information that I'm sure a lot of you don't know. Some of you have heard of a 15-year loan and a 30-year loan, right? 15-year loans. The reason why most people, or not most people, but the reason why people who are fortunate enough to get a 15-year loan opt for 15-year loans over 30-year loans is because they're paying less in interest. I want you guys to understand that banks are not criminals. They are only criminals to those who are ill-informed, those who do not know the system. That's why you should subscribe to this channel, because I am going to put y'all up on game so that you don't have to walk around and play victim, right? You can actually use these loans to your advantage to get into a house. And I'm going to give y'all a couple plays and a couple strategies so that you can be successful and you don't have to have a horror story, a mortgage horror story, or a home loan horror story. I want you guys to take yourself out of victim mode and put yourself into ownership, right? You are an owner. This home loan helped you get into the door. So there are people who have been born with this information. They have been lucky enough where their families has taught them how to use debt successfully, how to use credit successfully. So when they go to buy their houses or their investment properties, they take a 15-year mortgage instead of a 30-year mortgage. In the beginning, the 15-year mortgage may seem like a higher cost monthly, but here are the benefits to 15-year mortgages. You are paying your mortgage off in 15 years, half the time than a 30-year mortgage. So in retrospect, in the long run, your mortgage is actually going to be cheaper than somebody who takes 30 years to pay off their mortgage. That is why a lot of people who have this information, they opt for the 15 years, they have the money, they can afford that payment, and they are paying larger payments monthly, but a majority of their payment is going towards the principal. Unlike your 30-year loans, where you are paying a lot of interest before you are actually paying down your principal, which is why you buy a house at $400,000 today. At the end of that 30-year loan, if you have a 5%, 6%, 7%, 8% interest, you would end up paying $800,000. So $400,000 with that interest on top, over 30 years, you're paying double than what your home is worth. I know ain't nobody told y'all this, right? So that is the incentive for you to pay your home off sooner than the 30 years, because the more you pay down on your principal payment, the more money you're going to have in your home, the more equity you're going to have in the home, and the sooner you own your home free and clear. Wouldn't it be great to just not have to make that mortgage payment every month? Like, I know what I could do with $3,000 a month or $1,800 a month, right? That's about the normal mortgage payment in our area. The normal mortgage payment in the DMV is about $2,200 a month, okay? But most of my clients are buying like single family houses. So I see their mortgage payments being anywhere from $2,700 to about $3,200, $3,500, depending on the size of their houses. And as of this video recording, we are in February of 2025. The current interest rate is a 7%. So interest, with that being said, I'm just going to use the number of $3,000. That's what the most average mortgage payment that I see. Can you imagine what you can do with $3,000 a month, right? Because when you own your house, you won't have to pay that mortgage company anymore. So if you can discipline yourself to put down more money on your principal and get that loan paid down quicker, I have seen people share their stories here on YouTube that pay their mortgages off in 2 years. Okay? You have to think about it like this. If you are somebody who is a high income earner, or you are someone that gets bonuses on your jobs, a lot of us get large tax returns, especially if you have multiple children, or you are getting a large gift from a family member or some type of inheritance. If you take that yearly blessing and put that on the principal payment of your loan, you are going to cut your loan down substantially. Okay. I told you guys, one extra payment a year will take 7 years off of your loan. Let me make sure that I'm giving y'all that correctly. Let's see what chat says, because I hear people saying that all the time, but I just want to make sure that the numbers make sense. Okay. Does making one payment extra a year cut 7 years off my loan? 7 years off my loan. Okay. I want to get, oh, it's not a hoax, guys. It's very true. Making one extra payment per year can cut about 6 to 8 years off of a 30-year mortgage, depending on your loan balance, interest rate, and how consistently you make extra payments. Here is why. By making one extra payment a year, you're reducing your principal payment faster. Since interest is calculated on the remaining balance, lowering your principal means paying less on interest over time. Let me know in the comments below if you're following. Let me know in the comments below if you are team paying off my mortgage. Paying off my mortgage 2025. Put that in the comments below, or any other questions y'all have about this. But on a $250,000 mortgage at 6% interest, an extra payment each year will shave off about 7 years and save you tens of thousands in interest. Remember, guys, when you're making that payment every month, if you are not calling the mortgage company and telling them to add the extra payment onto the principal, they're just going to put it on interest. So when you're making these extra payments, you have you can't tell them on your regular monthly payments to put it all on principal, but any extra payments that you make, you're not going to make those payments online. You're going to actually call the mortgage company. Hi, 123 Mortgage. This is John Smith at 123 Main Street. I would like to add $500 onto my principal this month. So I've already made my regular monthly payment via the online portal. I am calling today because I want to make an extra $500 payment on my principal. You have to be clear in telling your loan company that that extra payment is going on to the principal. You got it? Good. All right. So let's keep going. Now, let's go back to our initial question. How to pay off my 30-year loan in 15 years. Bow, 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 bow. That's what I want to know, because I'm excited. I'm super excited about this. I told my husband, I said, baby, I don't want to pay a mortgage anymore. I do not. And sometimes my husband thinks that I'm delulu, but what he don't know is that when I get activated like this, baby, it's action. Okay? It's action. Whatever I say is what's going to get done. And I told him, I said, I want to pay this house off, and we're buying our next house cash. I don't want a mortgage. And I'm okay with that. All right. And I want my people to roll with me with this same energy, because right now, these mortgage companies and credit card companies, they're bugging on these high interest rates. And I don't have time to wait for Congress and who's the president. I don't got time to waiting for these people to get things right. I want my pockets right. So I'm going to take my God-given gifts and I'm going to activate and I'm going to get this money and I'm going to pay all this stuff off. And we're buying our next house cash. And if you feel me, drop a heart in the comments. Let's get into it. All right. Paying off your mortgage. Paying off your 30-year mortgage in 15 years is absolutely doable. Did y'all hear me? Paying off your 30-year mortgage in 15 years is absolutely doable with the right strategy. Get your pen and paper. Get your pen and paper, y'all. I'm about to take a sip of my tea because I'm giving y'all the tea right now. I'm about to take a sip of my Thai tea. All right, let's get into it. All right, here's how you can make it happen. Make bi-weekly payments. Instead of 12 monthly payments, split your mortgage payments in half and pay every 2 weeks. This results in one extra full payment per year, helping you cut down interest and shave off years from your loan. I'm going to repeat that because I got a little tongue-tied. Instead of 12 monthly payments, split your mortgage payment in half and pay every 2 years. This results in one extra full payment per year, helping you cut down interest and shave off years from your loan. All right. Number 2, round up your payments. If your mortgage payment is $1,350, round it up to $1,500 or more. Even an extra $100 to $200 per month can significantly reduce your loan term. I want you guys, for all of these strategies, to make sure that you are calling your mortgage provider and making these payments over the phone so that the extra amount that you're making every month is being applied to the principal. Put principal down in the comments below so the people that are in the back can understand that they got to pick up the phone and call the mortgage company and tell them to add the extra money to the principal. You cannot do this online, because if you do it online, they're just going to add it on like they take your regular monthly payment, and it's going to be applied to the principal and the interest. Your goal is to pay down your principal. So you have to call in and tell them, hi, I'm making a payment this month and I would like to pay. I'm doing my payment for this month. My payment is normally $1,350, but I'm paying $1,500. The extra $200 is to go on to my principal. You got it? Good. Now, if you use the bi-weekly payments, you're automatically going to just shave down time because it's like you're double paying monthly by splitting it in half. So for that one, I don't think you need to call your mortgage provider, but I would call and verify before I put up any money to make sure that you are getting that applied towards your principal. And I also, ChatGPT gave us 7 strategies. We're only on the second one, but I would call my loan company, tell them my plan, and ask them what is the best route to go about it. Because remember, depending on your loan servicer, these strategies can look a little different. So you want to have an open line of communication, let them know what your goal is and what's the best way to get about it. The mortgage company, they're not going to be salty because they really just want to get their money. You know what I mean? They want to get their money. They going to get a little interest off you anyways. But if you just sit around and take the whole 30 years, that's where they eat. Right? But y'all not going to be those people. We're team paying our mortgage off in 5 or 10 years. Let's do it. All right. So we are on strategy number 3. Make one extra payment per year. So if bi-weekly payments don't work for you, consider making a lump sum extra payment once a year. I talked about this in the beginning of the video. Use your bonuses, tax refunds, or side hustle income to pay down your principal. All right? I don't got to go into that. My people, I know y'all smart. I know y'all got it. Number 4, you can refinance. Now, this is for the people that are feeling a little spicy, all right? You can refinance into a 15-year loan. If interest rates are favorable, I'm going to say that one more time. If interest rates are favorable, and if you are watching this video in February of 2025, interest rates are not favorable, so this ain't the play. This one is not the play, but I'm going to share it with you so y'all have the information. If interest rates are favorable, refinancing to a 15-year mortgage might be a great move. This forces a shorter loan term, but make sure you can comfortably handle the higher monthly payments. And I'm going to put a little caveat in there, right? Remember how I opened up and I said the people who know better do better, the people who were born with this information or were blessed enough to be taught how to manage debt properly, they probably are already accustomed to making higher payments monthly. But if you are not, if you're a first generation homeowner, or you're like the first person in your family to even try to pay their mortgage off in 15 years, take the 30-year and then apply another strategy. That way, if something were to happen where you can't handle those extra payments, you're not in a situation where you have to make it. Because if you have a 15-year loan, you're going to have to make those larger payments, and it may not be conducive for your situation the entire 15 years. Got it? Good. All right. Number 5, apply extra money to your principal. When making additional payments, specify that they go towards the principal, not future payments. This lowers the amount of interest you pay over time. I think I've drilled that enough. I think I've told y'all enough that we are calling our mortgage provider and we are letting them know that the extra payments is going towards the principal. Okay? Number 7, use the debt snowball or debt avalanche method. This was in the video that I made yesterday on a way to lower your costs and to get yourself out of debt. If you have other debt, pay those off first to free up more money for you and your mortgage. The faster you eliminate the other debt, the more you can apply to your home loan. So this snowball and debt avalanche method, this is going to be for those of you that are like, Vicky girl, I am already strapped to the max, sweetie. Where do you think I'm going to get this extra money to pay my mortgage off in 15 years? Well, sweetheart, or my darling, this is going to be how you're going to get it done. Method number 7, you are going to pay off your other debt first to free up more money. So you're already paying off a credit card. You're paying $100, $500, $600, however much you're paying monthly on that credit card. Once you have that credit card paid off, that extra money is not free money because we're team paying off our mortgage. That extra money is now going to be reallocated to the principal of your loan. Okay? That's simple. That's simple. Let me know if y'all don't get it. If y'all don't get it, let me know. But I think I told y'all in a way that you should understand, okay? So that's where you're going to get the money. Pay off the little debt. And then once that little debt is done, you're going to take that extra money that you were already paying, making it monthly, because we're good stewardess over our income. We're good stewardess over our finances. We're paying our bills, right? Take that extra money. And now you're going to add that extra money onto the principal. That's how you gonna get it done, all right? We ain't playing victims in 2025 no more. We ain't playing, the man is out to get me. We ain't doing that over here. Over here on Vicky Koger's channel, we ain't doing that. We ain't doing that, and I'm gonna make sure that I continue to bring y'all information like this. Matter of fact, this video came from a comment that was left on 2 videos ago, and I said, you know what, bruh? I'm making a video about that because you are absolutely right. He was like, oh, these credit card companies and these mortgage companies, they'll happily continue to give out loans to people who don't qualify for them so they can eat up all our money and interest. And that's how they continue to get fat. They're not going to be happy until we end up paying 30% interest. And I said, that's a perspective. But let me help you flip that. What if we all got hip and we all took our 30-year loan and paid it off in 15 years? No one eats off of us. We own our house free and clear. We don't have to stress about monthly mortgage payments. We don't have to worry about a forbearance plan, a deferment plan, or a foreclosure because we own our house free and clear. Get excited about that. I'm excited about that, y'all. Sprinkle, sprinkle. Okay, so we went over that. Now, I told y'all how to do it. Just one extra payment will take 7 years off your loan. Guys, I do not want you guys to get tricked out the bag. And if you're watching this video all the way to the end, I'm going to have my contact information in the description. If you want me to send you the notes of the video, send me an email, send me a text. Vicky girl, can you send me the notes on how to pay my mortgage off in 15 years? And I will gladly send that to you for free, because the goal of my channel is to educate all of you who choose to follow me, subscribe, share, watch my videos. I want us to be financially free, financially empowered. Maybe we don't become financially free this year, but you will be financially empowered. You are not going to go out here and let someone sign you up for whatever, okay? You're going to have the right information. You're going to ask the right questions, and you're going to know exactly how to manage the debt that you already have, because it is absolutely doable to get yourself out of the situation that you are in. It's going to require some action, y'all. It's going to require some actions. One of my favorite sayings that my mentor used to say is, miracles happen in movement. Miracles happen in movement. I remember meeting with the seller, and she was, considering selling her house because she was going through some hard times. And I looked at her and I said, girl, you sell your house and then what? What do we do? Because the money that you're going to make is not going to last forever, right? And I said, what if God blesses you with one lump sum and you can pay the remaining balance off of your mortgage just with that one lump sum, right? I think that we're not accustomed to thinking about miracles because we are in an environment that feeds off of negativity and feed off of low vibrations and things of that sort. But I need y'all to rise up, raise your frequency level. For the sake of this channel, I'm not going to make a lot of videos about the metaphysics, but I will slip them in there when the opportunity presents itself. And I feel like this is an opportunity for me to remind you that you are definitely the captain of your ship. And when you change your mind, you change your life. Change your mind, you change your life. So if you start thinking in that way, miracles happen in movement. Miracles happen in movement. Every time you're making that extra payment on your mortgage, Heavenly Father, thank you. Thank you for this abundance. Thank you that I own my house free and clear. There is no more mortgage on my house. Okay? And I titled this video, Is It Worth It? Is it worth it to own my house paid in full? Yes, it is. Yes, it is. Because guess what? When you own that house 100%, you don't got to worry about no one coming to take your house. If you do decide to sell that house, all of the equity goes right into your bank account at settlement. So if you sell your house, maybe you bought that house for $250,000, you paid off the full $250,000, but today your house is worth $500,000. When you go to the bank and you close on that home, baby, $500,000 is being deposited into your bank account. You are now half a millionaire. Sprinkle, sprinkle. Okay, sprinkle, sprinkle. We're going to sprinkle our own abundance over our lives. We're going to sprinkle our own abundance in our bank account. So if we have to sacrifice and maybe work 2-3 jobs or do some side hustles, do some gig work, whatever the case may be, miracles happen in motion. And then once you align yourself with this thought of paying your mortgage off, paying your 30-year mortgage in 15 years, God's going to make a way. God's going to make a way. And I can't wait for y'all to come back to this video and tell me how you've been blessed. Tell me the strategy that you chose to use and inspire other people that are watching this video, because it's not by coincidence that we are all here together. So if you haven't already, guys, like, subscribe, and follow. Till we meet again. Bye-bye.